Hello and welcome to Invest with Rules. It's Scott Bennett and the great Mike Olafson, and we have a lot to cover specifically around constructing and how we construct the $1 billion fund manager report. Mike, how are you doing on this Wednesday morning and our topic today?
Doing well, Scott. How's it going?
I'm good. Yeah, so we have a lot to cover, so I'm going to jump right in. And before I do, world's quickest disclosure. This is just information, not a direct solicitation to go buy or sell anything. We say that because we always need to, please manage your rules, manage your risk, manage your financial plan. If you need help, we can always talk more about it. But the reality is, we care about you greatly, but we need you to filter it for your own situation. All right, Mike, I'm going to turn it to you. So I think it's a really good time to just discuss how we construct the $1 billion fund manager report. There's always a few questions, whether it's a new or a tenured member. But can you start from the top? And we're going to just do a quick segment on constructing the $1 billion fund manager report and reporting.
Absolutely. So the way this chart's broken up is you've got in the middle the funnel that we use to arrive upon, let's call our top $50 billion fund manager stocks. And on the left-hand side is kind of our process of what we go through to whittle down the stocks from everything to our list. On the right-hand side shows the grading and ranking so that you can kind of correlate the two. And then we'll wrap up in a couple of minutes with the actual, taking all this and putting it into action, the watch list and the actual model portfolio. So to start off, we start with every US stock. So at any given month, there are about 6 to 6,500, maybe more US stocks that are listed. We take that as the beginning universe, and any stock in that list is an NC. I'm sorry, I should reverse that. Any stock that ends up in that list, that top part that doesn't filter down through, as we're going to talk about in the next couple of minutes, ends up being an NC. So then the next level is we want to actually look at what the billion-dollar fund managers, though that approximately $1 trillion of money is holding. Now, these are funds that have outperformed the market. We analyze them and say, okay, what are they holding? And they're holding about in any given month 5 to 700, let's call it 600 stocks. So roughly 10% of that full universe. Okay. Any stocks in there that don't make it further end up either being called an H for a hold, meaning we're not seeing any signs of buying or selling. It's just kind of a hold. They're holding it. Or an NI, which is needs improvement, meaning that we're seeing signs of these big guys selling. We're seeing decumulation. So that kind of tier gets either an H or an NI. Then you go down the next level. We do a ton of filtering to say, okay, let's take that 600 down to actually our ranked list, which takes it down roughly another, let's call it 80% to about 75 to 150 stocks on any given month. Now, once you hit that level, that let's call it that third level, that's when you're actually ranked. The ranking is based on things like accumulation, are they buying it? Liquidity, earnings growth, and volatility adjusted momentum. There are a couple other factors, but those are the biggies. Okay. So now you're down to your 75 to 150 stocks. The next and kind of last level of this pyramid, this inverted pyramid, is actually doing the top 50 ranking. So we go ahead and provide updated filtering and we come up with the top 50 stocks. And that's ultimately what hits our list. So once we have the top 50 stocks, so you think about it this way, you go from 6,000 stocks down to 50. And it's roughly about 1 to 2% of the entire universe that we're able to filter down to and look at. Because I don't know about you, Scott, and about our members, but one of the things that confused me during my investing journey over the last 20 years is getting analysis paralysis over having this huge watch list of stocks or a huge universe of stocks, excuse me, and not knowing what to take action on. This takes us from 6,000 down to 50. Then the last bit down in the lower right-hand corner, we process that 50 through the trend roadmap. And then we end up, the next step is adding them to the watch list, which is updated intraday. And the factors for the watch list include things like rank, outperformance, and risk. We'll talk about that in a couple of minutes when we hit the watch list. And then lastly, once it's on the watch list, we then can add it to our portfolio if we have slots open and if it makes sense given the risk profile. So I just laid a lot out there, Scott. Any points of clarification or things you'd add?
I will add a couple of small points. So the first point is the hardest part of investing on your own is noise. Whether it's noise from social media, it's noise from your family friends, whether it's noise from other services, there's just too much to look at, and everyone is a genius, and everyone creates fear of missing out or your fear of holding it because it's falling on your face. So what we're trying to simply do is to not inject, we're so smart, look at us, look what we bought, I'm a genius, and just simply say, there are men and women at these humongous billion-dollar fund companies that are doing ground up fundamental analysis, but then they're deploying hundreds of millions of dollars per month at their favorite names. It doesn't matter if the fund has outperformed or not. All it matters is there's a sea of positions in their portfolio. They're buying some, they're holding some, they're selling some. So we're simply saying of the sea of $1 trillion, what are they buying? And that's the cream of the crop that we're trying to focus our time on. So there is a higher probability, it's not perfect. They can miss earnings, they can beat earnings, that this is what they want. This is their shopping list when they go to the grocery store. So why don't we get the best produce as well? That's all we're trying to simply do. And we're not trying to inject our opinion. We're just simply saying, are they buying? Is this thing liquid enough where large funds can get in? Is it growing at least 10% earnings growth? And has the return, accounting for volatility, you don't want to get shaken out as much as possible. Is this an elite stock? And that's what comes to our ranking and our list and eventually gets filtered down to the watch list. And then very simply, we use our trend roadmap because they're typically value-oriented students. That's what they are. So they love stocks that are on sale to their intrinsic value. So when you have a 20% pullback in the market like we recently had, they're going to buy their favorite names. And do we know immediately what they're buying? No, we know 30 days later, which is better than most people. And then we use additional analysis to say, okay, how do we bridge that 30-day gap? So for me, I personally don't care what people are doing on social media. I don't care. I don't care that they're trading this super thin small cap stock that's up at this much over the course of the period, or they're trading this super thin Chinese stock that I've never heard of. I don't care. All I care about is these funds will most likely keep buying, and that's what I want my attention on. Mike, before I pivot, anything I missed there?
No, I think we covered it. But members, you have any questions after this review, please hit us up, hello@investwithrules.com, and we'll be happy to address your question and bring it to the next video if there are enough questions.
Yeah, totally. And our hope is that we get several of these big winners. We're not going to get them all, and they move the needle for us and our families. So very simply, again, billion-dollar fund manager list. We have liquidity, fund buying, earnings growth, volatility adjusted momentum, and then you can say, show me the blues, show me the greens. That's the beauty of our research. And then be careful in the yellows and the reds. That's again, manage your risk. Buy on blue, sell on red. Buy on green, sell on red. However you want to do it, just manage your risk after you do it. So I'm going to pivot to the billion-dollar fund manager weekly ranking. So this isn't the watch list, this is the ranking. So what we're simply saying is we're putting that through our filter and we're saying instead of just snapping it once a month, we're snapping it once a week and we're researching snapping it more frequently. We'll get back to you on that. So here is the rank, and we've been doing it on Thursdays, but Robinhood, Duolingo, and you'll see a couple other ones if they're on Coast. But you'll notice that very simply when I look at this report is there are 25 gas signals on the top 50. There are now 22 overheats. So, and that's anything with a relative strength index over 68. You can use 70, you can use 68, you can use whatever you want. But the reality is this market has moved a lot in a short period of time. And then obviously the brakes will move down and the gases will move up. But very simply, you'll notice that there's a lot of great merchandise. And again, we don't own all, and we hope that you, I mean, we heard of a member just simply uses this list, goes after the gases. That would be nice. Obviously, not every single day is going to work. We simply are patient on overheats. Mike, what does the rank look like to you, and any comments on what we're up to behind the curtain?
Quick comments is we are seeing something that I really like to see. We're seeing the big fund 50 tend to outperform the market. And that's what you want to see during a uptrend. You want to see that outperformance because these growthy stocks that the big guys are buying and accumulating, you want to see those prices continue because it's almost like an underlying sign of continued accumulation without even having to look at volume. So that's something I'm seeing. The other thing I'll just throw out as a quick note of caution, tying into what you said, Scott, one could simply go ahead and buy the top 10 of the Big Fund 50 or whatever one chooses to do. But we advise against that. We advise buying number one, Hood, Robinhood. It's on an overheat. It's without even looking at the chart. I can just tell by the overheat, it's likely extended. And so it's not advisable to just go ahead and buy number one or two or three or top 10 without doing that extra bit of research, like we talked about earlier, to get it into the watch list and with the trend roadmap signals. That's really key. I think, Scott, what you said a couple of minutes ago, where maybe going down and buying the gases in order, that's a bit more plausible than just simply buying what's on top of the list. The watch list is key. This going to the watch list is key.
Yeah, that's a great way to put it. We're going to jump to the watch list. So again, mentally think rank, watch list. The watch list is what it's simply doing is it's
Yeah.
filtering out the overheats, the coasts, the breaks. It's filtering out things that are insanely extended. It's filtering out things that maybe are looking like they're tipping over technically. So very simply, there's times where there's going to be level ones, twos, and threes on here. And very simply, if it's a stock, we have the rank in the top 50. We have the day change. We have the short-term performance adjusted for volatility, higher the better. And we have the risk to the short-term risk unit, which is what we look at if it depends on where the position is, but we just want to manage our risk. We don't want to take big losses. That's a no-go. So very simply, we're going to go through some charts. This is our Wednesday watch list. Just, again, things are always subject to change, but we're first going to stop at Europe. IEV. I mean, just think relative strength. The S&P 500 not at all-time highs. IEV Europe, you're at short-term all-time highs. I mean, you not only broke out, but you sat on top of this resistance, and now you're making another run. So they are in an environment of growth and rising inflation. It's a very boom type of market. Hopefully, we'll head there soon in the U.S. Short-term uptrend, long-term uptrend. Obviously, it started on 411. The very low was 47 of the market. So it gave you that signal on the U-turn really quick. And then on 415, which is probably somewhere right in here, it said, go for it. Gas signal. So you got the confirmation and then off it went. Mike, thoughts on European equities?
I think the chart says it all at new highs. So I think that if you are in this or plan to go in this, just manage your risk.
Yeah, we have positions in VEU. Our advisory is ACWX. It's all world minus US. This is a very strong part of the economy. We're going to look at UTS. This is utilities. It's a little bit of a shuffle of the deck different than XLU from the State Street family, but short-term uptrend, long-term uptrend. You're making your way up. Utilities aren't the boring thing that powers your house. Utilities now power data centers, and data centers are going to be well needed if we are in this AI quantum computing world. And there's real growth in utilities. I know it sounds nuts to say out loud, but that's reality. And you'll see them kind of heading towards all-time highs, short-term, long-term uptrend. Could it kind of maybe do a little bit of a pullback as it's about to hit this resistance in February? But if this keeps running, this is going to probably touch It's January highs. So utilities, there's a lot of earnings growth here. So I'll keep moving unless you want to stop me.
Okay.
Australia is very material and financial heavy. They're a wonderful people. I studied abroad there many, many, many years ago. But EWA is on our radar, short-term, long-term uptrend. It broke out of its range. We'll call it maybe a flag or whatever you want to call it. And it's tested it. And this looks really similar to some of the European type ETFs. And it's making its way higher. So for 14, you got your U-turn, and then 5-2, you got your long term. So you're 12 days in. It hasn't really made a lot of moves, but it's just kind of sitting here. And this gold line from finviz.com is the 200-day moving average, which could very simply be used as resistance, maybe now as support. So materials and things are coming back to life if trade is back on. Speaking of trade back on, China, FXI, KWEB, short term, long term uptrend. Short term's up 7%, long term is up 14.6%. This has been choppy and volatile, but there's a lot of potential stimulus going on. There's a lot of potential growth going on. We'll look at this one. We'll go to KWEB. Full disclosure, we own KWEB, full position, doing everything right. I mean, I don't see any issues. Could you go all the way back up and touch 38 and then eventually make your move? If you zoom out on a chart like this and you look to the left, there's a lot of potential upside. Obviously, there's also risk, so manage that. But you pull up, you coil, you pull up, you coil, and then maybe you keep making a run. International is clearly a theme, so put that in the journal. Mike, thoughts?
I'll just add from a fundamental viewpoint on China that I did hear some stats that they're leaning away. They're basically their exports are leaning away from being as reliant on the US to being more reliant on other parts of the world ex-US. So that could partially explain some of the China strength, besides, of course, the direct tariff implications.
Yeah, and if you think about it, like the largest holding in the K-Web, I've personally, and most people I know have personally not touched any of those companies in the US. They're just,
Yeah.
it's not something we're buying. It's tech for them in their country. All right, Wells Fargo is teetering. It's right on 68. So it could be an overheat, it could be a gas. This one's a little bit more, it is what it is. It's in a short-term, long-term uptrend. This is why I try my hardest to just say, you know what, just it would have been more fun to be showing this over here, but it coiled and it's moving. Finviz is saying left shoulder, head, right shoulder, but you broke over the right shoulder, so they're going to have to take that head and shoulders pattern away. You've invalidated that thesis unless it rolls right over now. But in theory, you're probably heading back to 80. And Wells Fargo obviously has some momentum behind it and obviously has some fun buying behind it. Number 23 on the Billion Dollar Fund Manager report. We'll move to Booking Holdings, number 35 on the Billion Dollar Fund Manager report on that update more recently. Short term, long term uptrend. That is a volatility contraction pattern on a very expensive stock that has never split in ages. You're right near all time highs and you're getting tight, and who knows, but it looks like it probably wants to go higher. Thoughts?
It's just a tough one at a $5,000 plus dollar per share stock. Some platforms allow you to do partial shares, but yeah, booking is an interesting one. Do you happen to know, is the majority of the business US or is it ex-US or is it a mix of for the globe?
I
I'm
think
not
it's
sure.
both. I think it's diversified now,
Okay, yeah, yeah.
is my understanding. We'll go, I mean, again, theme alert, financials. I hope that's clear. International financials, they're not terribly extended yet. They're getting there. Regional banks, I know obviously interest rates are very dependent and their solvency is very dependent. Short-term and long-term uptrend. The long-term trend recently just started. It happened to be coinciding. There's the 200-day moving average. Our model's not based on that, but it's just simply saying that there's a higher likelihood you just get up to at least the resistance zone. Could you break up and out and then sit back down and make it attractive? It hasn't participated as much as the tech world, so it's on our radar. Same with XLF. There's been some fintech that has done really well, but this is clearly short-term, long-term uptrend material, not terribly extended. We're happy with our holdings. I mean, we're pretty exposed at the moment, so but this is just what's on our radar. I want to share, I'll stop here. This is, I think, our last one, AZEK. AZEK is a buildings material supplier. So if you are building a new home, which the US needs a lot more new homes to be built, and you need some supplies that aren't necessarily lumber, like if you're building one of those weatherproof housing decks, you need AZEK. And as much as the interest rates are dependent on the mortgage industry, you still got to build lots of houses. Short term, long term uptrend. Billion Dollar Fund Manager number 40 this week. You have your breakout, you've consolidated, and you're making a run for 54. If you break up 54, you got your green line breakout. You have a building supplier where people are probably going to eat the inflation if this thing has any associated with it. But this is where the funds are after. If you're going to be building houses, this is one of the suppliers. All right, Mike, I'm going to stop there. Any thoughts on anything that I covered that I didn't pause for you?
No, just two quick points on, first of all, on AZEK. You mentioned Greenline Breakout. People, members can Google it. Dr. Eric Wish developed that. And it's basically meaning going to all-time highs with some criteria around it. So in case you want to learn more about that. And then also a couple of these have been overheat. We use 68 on the RSI scale. That's kind of our early overheat indication. Overheat doesn't mean that it's going to stop going up. It just means that there's a decent probability of a pullback in that strong stock, meaning overheat, and maybe it's best to wait to gas and not try to buy it extended.
Yeah,
That's all I have.
I love it. And you can use the Billion Dollar Fund Manager report however you wish. If you're more of a value-oriented investor, you could
Yep.
go look at the report, go look at the U-turns. If you're more of a breakout growth investor, you could use the rank. I mean, there's so many ways to use this research. We're just trying our hardest to give you the results quickly of what we're looking at, and we really hope it helps you make a big difference in your bottom line.
In fact, Scott, maybe a good video topic someday would be the IWR confessional, where we each confess how I'm a growth breakout investor. You are definitely a value investor. And so we can kind of do the compare and contrast confessional. So that could be a good topic.
Yeah, yeah, that's full disclosure. That's me. I love when growth stocks get pounded and the opportunities that come. I do. I mean, just think about like where the last couple weeks.
Oh yeah. Yeah.
There's this overwhelming feeling of anxiety and stress when the market pulls in, but if you on the other end of the bridge is huge returns. So there's always massive opportunity. And if we know the funds are buying and it's on a huge sale and it's turning, it's like, whoo, that's what I'm looking for. All right, so I'm going to stop there. We follow the trend. We follow big money. We follow risk management rules. The process is very simple. Implementing it is very hard. We're here for you. So we really hope this research helps you. If you have questions, we want you to be wildly successful. That would make us incredibly happy humans. hello@investwithrules.com if you have questions. If you're like, so this is totally awesome, but I'd rather go on Booking, as we saw that stock, go on Booking and go book a vacation and not look at my portfolio for a month, then just reach out to us, hello@IWR Advisors. We care about that as well. It's a separate business. It's fiduciary. We look at your financial plan in extraordinary depth. We look at your investments and we go through a process where we weed out a lot of the downtrends and we add a lot of more uptrends. So if you want us to do that for you, totally complimentary. If that's something you're interested in, just reach out hello@IWRadvisors.com. Mike, final sign off on Wednesday. We'll see you on Friday. Mike, final comments.
Thanks for being a member. We'll be on the live sheet. And yeah, we'll definitely see you on Friday for a recap of the week.
Love it. All right. Again, thank you for being a member. Talk soon. See you on your email today and Friday. Adios. Bye-bye. I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.